A very good morning, guys. On Friday, this market did something it had not managed in a last 10 days. It tore straight through the resistance. Nifty closed at 23,622, up 461 points, almost 2%, with the entire move packed into the last 90 minutes of Friday's close. The Sensex ran 1700 points to 75,527. And the desk sitting short 2.5 lakh contracts had one job that afternoon: cover while it was cheap. They bought back just 23,000 contracts and stopped, betting the peace rally would cool over the weekend. The weekend answered it. Crude fell again. Korea jumped almost 5%, Japan 5.5%, and GIFT Nifty today morning is pointing at a second gap up of 360 points. My read today is simple and it has not changed in the last 3 sessions. You buy the dips. This is the Tanmay Edge. You are listening to episode 60. I am Tanmay Gurtugoti. Let's go. So a quick scorecard before we proceed, guys. Episode 59 graded 3 out of 5. The big call landed. I said 23,500 was the test and hold above it would open doors to 23,700 and 800, and that is exactly Friday closed at. What I got wrong was the cover. I said firmly they would buy back at least 25,000 to 50,000 index futures, and they came up short of that, and just 23,000 was bought down. Full breakdown is available on rupeecase.com. Hold that miss in your head because it is the story. Now Friday's tape, guys, because it sets the board of what is happening today morning. We came in expecting the global pop-up to fade, and instead the afternoon did the one thing crowded shorts dreaded off. At 1 o'clock, Nifty sat flat near 23,350. Then it lifted 300 points in the next 2 hours and closed on the high. The day low of 23,313 already forgotten. Look where the strength sat. Banks led. Bank index ran almost 3%, and BSE Bank Gauge added 2.94%. Financials topped the table up 3.15%. Realty ran 3.5%. Bajaj Finance alone added 5.5%. HDFC Bank 3.73%. Axis 2.92%. Only one sector finished in red, and it was IT, down a tenth, still nursing Wall Street's bruise. The VIX crushed almost 6% to 14.72 because when sellers are winning, they do not want to pay up for the fear. And the rupee, the loan hold out on Thursday, finally confirmed at 95.08, its best day in months. The why is one word: peace. Trump's Iran settlement pulled the war premium out of the crude, and over the weekend it did not stop. Brent is down another 4% this morning to 83.69. The US benchmark under 81. Both rated extremely bearish. Lower oil is a direct gift to a country that imports most of its energy. A lower import bill, a stronger rupee, softer inflation, more room for the RBI later. The bond market agrees to it. The US 10-year yield slipped to 4.43. Asia took the baton overnight. Japan is up by 5.53%. Korea is up by 4.7%. Taiwan is up by 2.68%. GIFT Nifty sits at 23,988 against Friday's close of 23,622. A gap up of roughly 260 points and open near 23,950. Now the positioning, because it tells you why you buy the dips and don't fade this. The official numbers are in. The FIs is still short 2,43,623 index futures, having covered just 23,000 on a 2% up day. Only 33,000 lighter than the Monday's peak across the entire week. Underneath that, they are short the calls and long the puts. A fully hedged bear book. The smart money that flips first are sitting long. Long futures and long on both option sides. Paid more for the move, and the retail crowd is piled long with 1.8 lakh futures and a huge stack of sold puts leaning bullish into the rally. So the only bearish player left in the building is the one desk that is trapped short, and it is the fuel, not the warning. A short that refuses to cover does not escape the move. It pays up for later, and the 360 point gap up marks the book worse before the bell even rings. So lay that 23,950 open on the options board for Tuesday's expiry, and the structure says buy the weakness. The big number is 24,000, the strike that holds 1 crore 5 lakh calls written over there. By far the heaviest block on the board, a round number ceiling sitting just above the open where we are going to start with. Below us, the old sellers are flipping to support. 23,800 with 63 lakh and 23,700 with 41 lakh, both now underneath the opening price, and the floor is concrete because the put writers planted themselves at 23,400 with 93 lakh contracts, 23,500 with 85 lakh contracts, and 300 with almost 90 lakh contracts. Those are the people who lose money if the market falls, and they have parked a wall of capital saying it won't fall. The whole chain reads with 2 puts written for every call. A bullish trend is present all the way up, and ATM straddle for Tuesday is around 280 points. The market's own price for the week's move. The plan that is for today, and it is buy on dips. 3 steps. 1. The trade is buy on dips, not the chase the gap up. Let the excited open settle and buy pullbacks into 23,850 down to 23,750, right on the top of the sellers who just flipped to support, with 24,000 as the first target. 2. 24,000 is where you take something off, because 1 crore of written calls does not step aside on the first contact. So sell a piece of the rise there. Only a 15 to 30 minute hold above 24,000 opens the next leg to 24,200 and 24,500. There. 3. If the open fades harder, the real buy zone is 23,650 down to 23,500 as well, sitting on the put writer's floor, and that is where the strong hands would add a lot more of longs in this fall. The continuation is only dead if we lose that 23,500 in the first half an hour, because that breaks the floor the writers built in. Until then, every dip is a buy. The simpler trade is a warning about the gap, not the fade of it. The VIX is at 14.72. Premium is already cheap, and a 360 point gap will flatten the call side and make chasing look smart. Do not buy that opening spike the day before a weekly expiry, with the market parked in the calm zone above the flip, usually belongs to the patient buyer of dips and the seller of premium once the range settles in, not the breakout chaser. Let the crowd pay up, you wait for the pullback. The honest risk is the one thing holding all this up. The entire 2-day move rests on a peace settlement holding, and we have watched settlements break twice on this show. A fresh Iran headline and a crude back above 90 unwinds it fast, and a 360 point gift at the open is also 360 points of air below your entry. And notice that one tell that is not confirming. IT, still the lone red sector, still flashes sell. The rupee at 95.08 is on our side. The laggard is not. Buy the dips, keep the stop honest at 23,500. So Monday in one breath, guys. Friday broke 23,500. The shorts refused to blink, and the weekend gapped them another 360 points. The trend is up. The smart money is long. The put writers are defending 23,400, and the only seller left in is trapped. So buy the dips towards 24,000. Take something off the wall and add lower at 23,500 if it comes. The continuation breaks only below that 23,500 mark. Call it buy dips continuation. 24,000 is the resistance. Trade that level, not the opinion. This is the Tanmay edge, guys. If this helped you read the tape more clearly, share it with one person who trades and needs it right now. Hit that subscribe button so you never miss a morning podcast. Stream the full episode free and first on rupeecase.com and on Apple Podcasts and Spotify every trading morning at 8:30. And leave me a rating, guys. I read every single one of them. I'm waiting for your reviews. Have a great trading week, guys, and a happy Monday.